Assalamu alaikum. Global financial crisis, austerity measure, public sector costs, Eurozone bailout. Words that are being bandied about the media every day. But what do these words really mean for us, and how bad is it out there? We're experiencing the worst financial crisis since the 1930s, with food and petrol prices increasing on a daily basis. People in the developed world are losing their jobs and homes, and there is an increase in public sector debt. How are we going to get out of this mess, and can Islam offer us a different financial perspective? Welcome to In Depth, a special news report on the global financial crisis. We've spoken to experts in the field to get the answers to these questions and many more. But first of all, we'll start with the nature of the problem. Just how bad is it out there?
These are scenes of a world in turmoil, the consequence of rising unemployment, fluctuating food prices, rising petrol prices, and increasing concerns about a likely grim future. These scenes are being played out across the world, no longer reserved for the poorest nations. They are now commonplace in so-called developed countries: Italy, Greece, Spain, even the USA and United Kingdom. Since 2007, which many pinpoint as the beginning of the downturn, global unemployment has increased by 27 million, reaching 200 million in total. Economists estimate that more than 400 million new jobs will be needed over the next decade to avoid a further increase in unemployment. However, most agree that the global financial crisis will continue for at least the next 5 to 10 years, if not longer. In fact, projections suggest no change in global unemployment rate for the next 4 years, leading to an additional 6 million people unemployed. Among the 900 million working poor, there are an estimated 456 million workers around the world living in extreme poverty below the US $1.25 a day poverty line in 2011. Meanwhile, as jobs are hit, food and petrol prices have taken a beating in the past several years, compounding an already difficult situation for the poor and middle class around the world. While food prices had their biggest drop in more than 2 years in May, experts say that decline is coming from already highly inflated prices. In the UK, the average family food bills rose by more than 26% between 2007 and 2011. And although there has been some easing in the inflation figures from this year, many families are noticing the increased costs of their weekly shop. Between 2007 and 2008, the cost of basic food price rose up by 80%. The price of wheat shot up by 90% and the price of maize shot up by 80%, only to fall rapidly again in the second half of 2008 and only to spike again in 2011 and into 2012. Increasing food prices hit vulnerable, food-insecure countries the hardest. After 2008, millions of people in sub-Saharan Africa and parts of Southeast Asia were pushed into extreme poverty and hunger.
So we see that countries are in more debt than they'll ever be able to repay. Yet the cycle of lending continues. We see an increase in the cost of living, and also we see that countries are taking austerity measures to help them survive in these difficult situations. So just how did we get into this mess, and why wasn't it dealt with earlier? To answer these questions and help us understand how the situation developed, Ahmed Salah met up with John Moulton, a British venture capitalist.
And what do you see as the roots of the problem? Do you see it primarily as a debt issue and an over-leverage issue?
At a very first approximation, we were living with too much debt at a consumer level, at a company level, and at a country level. The bizarre thing is, of course, that the solution to this has been to allow more debt to roll up since.
And is that part of the issue we're now facing? And one of the questions I know people are asking is the money that's being used, for example, to potentially bail out Greece now, where's that money coming from?
It's a more philosophical question than anything else you're likely to answer me. The money is, of course, coming from being created by assorted European entities.
But it's the printing press which is they're hitting the print button.
It gets into the land of the fairy tale. I mean, you have Ireland and Portugal helping to bail out Greece, and Greece helping to bail out Ireland and Portugal, all through some something or other, which keeps changing its name and its size, which just provides, it appears, limitless supplies of capital. The central banks now seem to be given the power to solve everything. So central banks across Europe are something like 4 times the size of 6 years ago in terms of their balance sheets. Interest rates are driven down to incredibly low levels. Everything's done to avoid letting the consequences of that original over-leveraging to actually be felt for the protection of politicians.
But why aren't the banks putting the pressure on the companies?
They don't need to. They have a limitless supply of essentially free money from the European Central Bank, now under the new 3-year long-term funding arrangements. Very cheap, very easy. They have politics which say if you start putting companies into bankruptcy, you'll make the bankers even less popular. Accounting, which enables the bankers to maintain the full value of their loans, even when the company manifestly isn't worth the loans. They have to actually not make a payment nowadays to be forced to make a provision.
And there's a very interesting point I heard you made in an interview a couple of days ago about us actually taking away from our children. And we're fooling ourselves and believing we're going to come to the end of this problem. We're actually saddling our children with a massive, massive problem at every level.
The morality of what's going on at the moment is very dubious. Let's just take the UK for a second. We spend £5 at government level for every £4 of government income. The £1 doesn't vanish, it goes into debt. That debt, there are 3 things that can happen to it. 1, you can service it, pay the interest, pay the principal. The economy will grow slower in the future from servicing the old debt. Or you can let inflation out the bag and let the debt be wiped out. Very immoral sort of activity, and if inflation gets to a high level, something which gives chaos in economies and will result in lower growth into the future. And the third thing you can do is default on the debt. That's it. There are no alternatives to deal with debt. In short summary, we are living better today at the expense of those who follow us, our children. That's what running a deficit really means. Nobody's comfortable with this. When you make this point to an audience goes stationary, sits quietly and doesn't move. It's like going to a cathedral. People don't like the Marathi. There are other bad bits about the Marathi. The very low interest rates, well below inflation, mean that people who save, traditionally people we actually thought were good people, are actually being punished, and people who borrowed far too much money and took a hell of a risk are now being rewarded.
But at the moment it's a pretty bleak scenario. And of course we have this wonderful issue where the politicians are constantly blaming the banks, and they whip the media up into this frenzy and pointed all the fingers at the banks. And I'm not defending the banks, but the banks at the end of the day were given a free rein and encouraged by the politicians to create these debt bubbles, to give mortgages to people who should never have had mortgages.
It's really nice to live in a bubble when it's going up. So house prices rising, everybody feels they're richer, everybody's making money out of things being churned over, and everybody's getting better and better. But it's just unsustainable when it's funded entirely by debt.
And that's exactly the problem we now have to go through. So what do we need to see? A 25% reduction in the state, as you say? Or?
It's certainly 20%. To get from 50 to 40, it's a 20% reduction.
And people's standards of living?
Would go down in the short term if they're employed by the public sector. People would move jobs from the public sector to the private sector. This has been done in a very few economies. Most notably in Europe, Estonia. But actually, you go back and you look, the UK did it in 93 to 99. We took 7% out of the size of the state over that period.
So it can be done?
Yeah, and the economy grew at 3.7% compound over that period, which is a growth rate we'd die for nowadays. This year we'll be very lucky if the UK grows at 1%.
And so the solutions, either we take the pain, which politicians would never allow, or will they be forced to actually cause
Well, actually, it's quite straightforward. Would you like to take an unpleasant amount of pain in the short term, or would you be prepared to take a great deal more pain in the future?
Quite a stark solution.
Those are the only solutions. The likelihood of us blundering through, finding a complete new economic system which takes us out the other side,
It's not going to happen. And your own personal view on which one it'll be?
no, we'll wait till something horrible happens, then the response. I can't see, there's no political leadership anywhere visible in Western Europe that's interested in anything but the short term.
And this story is replicated across the developed world. It's not something that's unique.
Overwhelmingly in the Western world, much less so in the rest of the globe. And there are bits of the Western world where it isn't so bad: Norway, Switzerland, Estonia.
But what about Africa? What's the economic situation there? Here's Dr. Wasim Khan.
I mean, if you look at Africa as a country, I mean, it's 53 countries in Africa. It's close to 1 billion people. And Africa's economic growth over the last 5-6 years has been quite significant. Some of the countries are growing at a rate. For example, Ghana is currently poised to grow at a rate of about 11.5% this year. Ethiopia is poised to grow at a similar rate, which is rivaling the economic growth rates of China, for example. Some of the other countries are growing at a rate of 6-7%. Now, the global economic financial crisis has affected these countries, but not to the extent that it has affected, say, the other Western countries, right? Even less than it has affected the Asian countries. It's true that Africa is starting from a very low base, but nevertheless, the global political stability, if you take the Arab Spring out for a moment, but the political stability that you've seen in many countries in Africa, that has been there now and continues to grow over the last 8 to 10 years, that has really supported the economic growth in these countries. And so Africa is now becoming a focus for investors to invest in different things. China is already all over Africa, building roads, bridges, and so on and so forth. So infrastructure is being taken over by the Chinese. They're all over the place, no matter where you go. The headquarters for the African Union in Addis Ababa was recently inaugurated, was built by the Chinese. The original price of the building was $300 million and was supposed to be completed in a matter of 4 years. The Chinese completed it in 2.5 years at the cost of $200 million. So the Chinese are very progressive in Africa. A lot of people say they are after the resources in Africa. Yes and no, but nevertheless, they are aiding the development of Africa at this stage. So I think that personally, the impact of the global economic crisis on Africa is much less than it is elsewhere. Africa is something that we should need to perhaps take a look at, both from an investment point of view, from a stability point of view, and also from an Islamic point of view, because if you look at some of the larger nations in Africa, like Nigeria, which is 155 million people, half of them Muslims. You take a look at Ethiopia, 82 million people, 60% Muslims. And you look at some of the other countries, be in the Maghreb area, in North Africa, there is a significant opportunity there to bring in Islamic finance. And Islamic finance can, if implemented properly, can help stave off some of these crises from these countries. That has been the case, i.e. lower levels of debt, lower borrowing, more entrepreneurial economic activity, and basically the opportunity in almost every walk of life to be exploited.
So the picture looks grim. We've talked about the corporates, but what can you and I do at a personal level to help cope with the toughening of this worsening financial crisis? And what can Islam offer in this situation?
I think a couple of things that they could do are basically essentially, A, if they have any outstanding debt, reduce the amount of debt to the extent that they can without taking undue burden. The second thing is not to take any additional debt, because at this stage, the way the economy is going, further into recession. People are not sure whether they'll have a job tomorrow or not. And in the incidence of not having a job, trying to pay off existing debts or debts that have been taken on new, i.e. loans, is going to be very difficult. So I would say that individuals should not take on any new loans and try to pay off existing loans to the extent possible.
What does Islam tell us about economic systems?
The Islamic economic model basically preaches several things, but first and foremost is equity and justice. It's legal justice, social justice, and economic justice. And this is something that Hazur Ayatollah ibn Aziz has said many times in speeches and sermons, that unless there is justice and equity in the world would continue to face crises of different kinds. So until this equity and justice globally is restored, we will continue to have these issues. The second element is debt. And Islam abhors debt and interest rates. Interest, which is called riba in Islam. It's precisely for the reason and the consequences that we see currently that Islam does not like, and Islam prohibits debt, because when people borrow beyond their means, they're unable to pay, and interest continues to pile up on top of that. You have an element of what you call as usury. And the usurious impact of debt can be very significant for individuals, families, and nations. We have seen this time in and out in the crisis, that's the Latin American credit crisis of the 70s and 80s, the Mexican crisis of 1994. We have seen this in the case of other countries that have piled up. And of course now, Greece, Portugal, even Ireland to some extent, Spain and Italy. When people borrow a lot of money, they are unable to pay because economic conditions do not allow them to earn as much and pay back, and the interest continues to pile, then you see that recessionary winds facing the country and the nations. So that's where the issue is. In Islam, there's something called debt forgiveness. Islam prohibits debt for the lending for the sake of lending, but lending for the sake of generating economic activity is allowed. And that's what you call as entrepreneurship. So the rules for lending and for borrowing in Islam are very clear. A borrower can borrow as long as it is used in economic activity to generate wealth, not only for the borrower, but for the society at large. And we have to remember that society at large is a very important element of Islam. Because Islam says that the resources that are available to individuals in this world are them to exploit, not for their own self, but for their fellow human beings as well, the society at large. But everything in this world belongs to Allah subhanahu wa ta'ala. Our actions in terms of helping other human beings will determine the rewards in life hereafter. So therefore, any borrowing or lending that could be done and without interest has to be done on a profit and loss sharing basis in Islam. And when that is the case, that if there's a loss, then both the entrepreneur, i.e. the financier or Rabbul Mal, and the worker will have to suffer the loss, share the loss, and so share the profits. Therefore, they will be very diligent upon embarking on the project or the business that they take. Islamic economics or the Islamic financial model cannot eliminate crisis. It can significantly reduce the incidence of these crises.
Rather than walking hand in hand with the most destitute in society and raising the standards of living for all, we have widened the gap between the haves and the have-nots. Islam's answer would restore equity and justice for all people. The concept of debt forgiveness, the prohibition of interest, and the wanton acquisition of wealth irrespective of one's needs helps to lay the foundations for a just society for all people.